I've seen so many independent traders struggle because they think they need to know dozens of complex setups to succeed. The truth is, you don't. You need to master the vital few. Today, one of our veteran traders and top mentors is sharing the 3 foundational setups that he believes every trader needs to build a career on. I'm Mike Bellafiore, co-founder of S&B Capital. We're a proprietary trading desk in New York City and Miami that's mentored numerous traders into 7 and even 8-figure a year producers. What you're about to see is from our real playbook. Let's get started.
Welcome back to another Bar. July gave us 3 of the best trades we've seen all year, and each one told a different story. A red-hot AI-related IPO that opened more than double its pricing and generated over $5 million in profits across the firm for those who were ready. A momentum stock that went parabolic, then reversed in one of the cleanest kill candles we've seen in months, if not years. And last but definitely not least, a breakout every trader was watching as Bitcoin exploded through all-time highs in a perfect storm of confirmation and context. These weren't just great trades, they were playbook trades. So in this video, we're going bar by bar through all 3, showing you exactly how to recognize them before they happen and how to trade them when they do. First up, the Figma IPO on July 31st. A little research shows us Figma isn't just design software. It's an AI-powered, browser-based operating system for building the internet. This IPO is red hot, and with AI continuing to drive the market higher, it's no surprise Fig became one of the most explosive debuts of the year. It was priced at $33 and opened at $85. That kind of gap tells you everything you need to know about demand. This was also one of the top 3 trading opportunities of the month, and our firm pulled in about $5 million on it. Now, we can't share every trade we took. Some rely on proprietary technology, including order functionality built in-house by our team of engineers. These tools aren't available to retail platforms like Robinhood, and to be honest, there are trades we don't talk about publicly because of liquidity and competition. But the 2 trades we'll show you, the overnight setup and the opening drive, were different. These were clean, high-conviction setups with almost unlimited capacity. If you've been following recent IPOs like Circle, CoreWeave, AMBQ, and LHAI, you've probably started to recognize some repeatable patterns. Studying these names help you connect the dots and get familiar with what works. You could also get ahead of future trades by checking out IPO calendars like the one on renaissancecapital.com. This is the kind of setup you want to have ready if names like Stripe or Databricks hit the market next. Let's break this one down bar by bar and show you how it played out. As you can see, this is the IPO from Fig. You can see that it opens up at 2 o'clock p.m., which is pretty late for an IPO. And if you wanted to buy this, you didn't have much time to do that with 2 hours before the close. That is, if you wanted to buy the IPO on day 1. As it opens at 85, it quickly dips, and then you just see a rush of green prints hitting the time in sales and clear momentum to the upside. If you could catch that dip and rip, you want to take advantage of that opening drive and go long versus the lows. As far as trade management goes, you have a couple options. You could trail by prior bar lows. You could trail using an EMA. You could trail using 2-minute bar prior bar lows, 5-minute prior bar lows, but you want to stick with the trend, and you want to make sure you're also taking profits into momentum as the idea proves itself and the opening drive starts to run away. Many traders simply were not quick enough to catch that in the first few seconds off the open, but there was a strong trade into the limit up into $95. You could see that the demand is clearly there, and you could enter in long as soon as price hits that limit up and holds there. Following the open, Fig explodes higher, testing that $100 psychological level and a really, clear level to take some profits into. It just had to move from 85 to 100, a psychological level where we could see some profit taking happens, and it makes sense to sell a piece of your position into that $100 level. And you can see price really starts to move away after that. And most traders are scaling out into that momentum, into that short-term overextension. Following that trade, Fig holds 100. Now you can see it wash out through 100 down to 95 and it rebids. Washes out through 100 down to 95 and rebids, and then has its next leg higher, which was also an opportunity for traders on our desk to take a long scalp for a second leg. Now you got to be quick to catch that trade, and you got to be a fast momentum type of scalper to really take advantage of that. For those traders that are more analytical, there was, in my opinion, another excellent opportunity that the desk did just as good on, if not even better. This trade took a while to develop, and it gave you plenty of time to get in. That is the continuation into the end of the day and the overnight long idea. Fig puts in a high, 116.38, starts to show some resistance around $112 and pulls back to 100. And 100 holds again. And $100 holds again. We start to hold over VWAP. Now, for me personally, and I know from many of the traders on my team who've studied recent IPOs and just IPOs over the years, a common pattern on a strong IPO that is gapping up way above its pricing, in this case, Fig's pricing was 33 and it opened up at 85, a pattern that could play out is accumulation into the close and a continuation, the last hour to the last 30 minutes of the day. And again, from studying these IPOs, that's exactly what I was looking for. I know this trade works best the last hour of the day from studying hot IPOs over years and years. $100 proves to be support. It holds. Now it holds very cleanly. And we have a little bit of a higher low into that $100 level. And we reclaim VWAP. And we start to hold above the 921 EMA in VWAP very clean. We could also see that there's also a level here at $108. So after that second leg, $108 tried to hold. Price pops into 108. Previous support becomes resistance. And again, previous support is resistance, except this time we have a little bit of a higher low, and now we're consolidating just below 108 with an hour to go before the close. We could even draw this simple trend line from the highs and follow it along the low into 100 and the higher low. And we could also just simply draw this wedge to help us formulate our trade. This is where I made most of my money. On this trade, this is where bulk of that $5 million came from. This trade into the close. So as we start to break the wedge and consolidate under 108, I start to build in a position, and you have a couple places to put your stop for this starter. It could be just under this consolidation, which is where my stop was. If price broke back through VWAP and broke below this consolidation, back inside this wedge, I wouldn't want to be involved. So I set my stop for that starter just below 103. I know that other traders were willing to be a little bit wider with it and give it more room to below 100. It's just a personal choice. And then I was looking for confirmation and a hold above 108 to add to my position. The stock broke above 108, held 108, and started to curl up. The stock attempted to break back below 108 and then curled up and broke through that $112 level. And this was the confirmation that I was looking for. I wanted to see it break back above 112, and the tape truly felt different on this move. It felt like it loosened up a little bit, and some volume did come in there relative to the last hour or so. From watching my team trade this was the moment that we all added to our position in here. This was the key moment for us on the break back above 112. You can see how well it is holding the 9 and 21 EMA on the 1 minute. Pulls back, it's continuing to hold the 9 EMA, which is a great indicator of a strong trend. And then we get the pullback into the 9 and the push to new highs. Next up, we're looking for the breakthrough high of day. And this is another opportunity to add, and some traders on the desk were adding to their positions. Following that move, we get a consolidation above that initial opening high, which is a great check in favor. And then we speed up from 119 to nearly $125, which there's some resistance at. And it's clear for about 4 or 5 minutes or so, we cannot break above like this 124, 125 area, and we attempt to push, and then there's a failure. And that is a great time, for me at least, to take partial profits on this position. Then what I noticed was that we pulled back into that prior high at 116.40-ish. And I was really focused on the bid side on the level 2 to see if buyers would step in at that price. And the previous high access support for 1 minute tries to break below and reclaims. It's 2 minutes, it's holding that level, 3 minutes. And this is where I add back to my position, getting back to my original size. So taking profits into clear resistance at 125, doing the best I can to hold on to a bulk of my position, and then this attempt to break out and then stuff, that was a place for me to sell about half. But then I'm recognizing the pullback to the prior high. I'm watching the bid side to see if buyers step in, and they do, and I'm adding everything back. Now we have a strong day one IPO in a hot sector that's breaking out into the close. There's clear momentum. This is what a perfect overnight looks like. It closes in the top 20% of its intraday range, closes above that high, and there's just no reason to sell it at this point. I'm watching it throughout the after hour session. We'll zoom out to a 2 minute, and it's holding trend just perfectly. Support at the 9 EMA, wicks into the 21 EMA, and holds. And you could see how well those EMAs work following that trend break from the flag. Ever since it broke this wedge, broke that flag after the hold of $100, it just steadily held the 9 and 21 EMA on the 2 minute. And I had an idea that this could go towards 150. And being patient with it. Yes, it does break over the intraday high in the after hours and pulls back. That's okay. I'm not really looking at that as a false breakout. It's still holding trend. Continues to hold trend and starts to push up. But price isn't really going parabolic yet. It's just a steady, slow grind. In this moment, as we go from around 130 to 140 pretty quickly, this is where I begin to take profits on my position. The ultimate goal of about 150. The pullback to the 21 EMA, again, like we've seen throughout the after hour session, and it holds. We push up into 150, where there's a lot of resistance, and then there's a failure. And then there's a lower high and another failure. And this is where I decided to sell the rest of my position and lock in profits. Now, that is how I traded it. And I know my team of 8 traders, that's the same way that they traded it as well. They were taking profits into 150 and they did not hold it for the overnight. But there were many traders at the firm that did hold it for the overnight. For the overnight, these traders are up at 4 in the morning, ready to execute as pre-market trading opens. Now, what they're hoping for is a gap and a continuation higher. That is the trade. And when price doesn't gap and there's a failure from 150 again, the trade is over for them. 2 trades here. One of them we cannot talk about due to liquidity constraints and competition, but there was one for the quick momentum scalpers off the open on that opening drive. There was another one for the more analytical traders who like to wait for price action to develop. And that's that wedge break and the momentum into the close and the overnight swing. Next up is Open from July 21st and the 22nd, and this is a textbook example of how momentum flips to panic. Stock had gone parabolic, running from under $1 to nearly $5 in just a few trading days. We'd been watching it closely because when you get a move like that, you don't look for a slow unwind. You wait for a trapdoor moment. Heading into the session, Open still looked strong. Bids were stacked, momentum was there, and key support levels kept holding throughout the day. But when it came close to $5, everything changed. A massive kill candle came in, blowing through key support levels like nothing. This wasn't normal profit taking. It was a full-on panic confirmed by the highest volume bar of the day. The bounce afterwards was just as telling. It failed hard right at former support, which was also VWAP. That's when we knew the character of the stock had changed. We were already watching this because of the extreme move, but the kill candle gave us confirmation. The close on lows added even more conviction to the idea, setting us up to short pops into resistance the next morning for a second day continuation trade. Let's break it down bar by bar so you can see exactly how we traded it. Here's a look at Open. Here's the daily chart. You can see that price goes parabolic, and we're looking for a mean reversion short. This move starts at just under $1, and in 5 days, we're 500% to nearly $5. Now, there's a lot of different ways we could measure overextensions and quantify overextensions, and that could be via RSI. That's one way we could quantify an overextension. You could see into this move into $5, RSI was a 93. Anything over 85 is considered extreme and overbought. We could look at ATRs. So we like to quantify overextensions using 5 ATRs from a 5-day low. That is this black band that you see here. It's measuring 5 ATRs from a 5-day low, and you can see we were way above that. Could use something like a Bollinger Band. If we put Bollinger Bands on this chart, you can see the stock was trading way above those Bollinger Bands. And another way is a certain percent move from the 10-day simple moving average. Any of those will work to help you quantify an overextension, but when they all align, that's when you could get the most conviction. So you see how my levels marked. Open was overextended, and one rule that I have when I'm looking for a short in an overextended stock is that if it reclaims or it is above VWAP after 1030, it is not a short. The bulls are in control. And that helps me minimize any front side trades. Stock is still trending. Bears couldn't push price lower off the open when volume is typically the highest. It's holding well above VWAP after 1030. It is not a short yet. Heading into the afternoon, we get this push and a little bit of a blow off, the highest volume bar of the day, and then the stock pulls back and it holds $3.80, $3.70. It's our first support level, and it fails to break down after that. And you could see that volume that comes in there. After it dips below 380, price can't push any lower, and it's soaked. Selling pressure is soaked, and it reclaims 380 and holds 380. The stock makes a new high, and we have a couple new support levels, $4, and another level at $4.20, which you could see hold. Price continues to grind higher, and if we zoom out to a 5-minute, you can see how well that 21 EMA works on the 5-minute. Trend is not breaking. Pull back to the 21 holds on the 5-minute, holds on the 5-minute. And when I'm trading something like this, I want to be aware of multiple time frames. So I'm typically looking at a 1-minute, 2-minute, 5-minute, and 15-minute chart to help assist in my trading. Because you'll see things on the 1-minute that you don't see on the 2-minute. You'll see things on the 5-minute that you don't see on the 2-minute, so on and so forth. So the trend is still intact. And something interesting happens here near $5. We get a push towards $5 and price can't quite get there. We could simply draw a trend line from low of day and follow it up, and that trend line starts to break. Now, there were traders at the firm that were able to recognize that and see the change in the tape, bids starting to drop, and they were able to get short in here and then add into this kill candle. But you don't need to get started this early. We have the confirmation of what we call this kill candle here. A kill candle is a candle that smashes through multiple support levels on the highest volume bar of the day and goes through VWAP. It breaks through VWAP and multiple support levels effortlessly, and it often goes limit down. In this case, Open did exactly that. All of a sudden, selling and panic come in, and it's like a trap door. And everyone who is buying this and chasing it higher and higher after a 400 or 500% move, they suddenly realize that they were chasing out of FOMO and the floodgates open. Now, we never really want to chase a candle like this down into the LRP. I prefer to wait for a trade that I call the first bounce. So we have our kill candle and I'm waiting for the first bounce. This kill candle gives me conviction that the stock is now flipped and it is on its backside. The stock pops back into VWAP and 380 and I start my short position. I'm risking to just the unchanged price from this kill candle where all this volume came in. My stop is just a few cents above that kill candle. Starting a short into 380, and then I see $4, that whole number reject, and I'm adding to my short. Now we can't quite see it here, but this was an interesting candle. Price goes from $4 and it flushes VWAP pretty quickly down to 370, and this is an ad for me. I'm still willing to risk this entire position to just a few cents above this kill candle. So there's a little bit of a battle here between about $3.75 and $4, and then suddenly we reclaim. And I'm thinking that this might be the moment that shorts are trapped and there's a squeeze, and I'm prepared to take my stop where I'm completely wrong on the idea above the kill candle. However, $4 rejects again, and we get this curl. I like to call this pattern a curl. We could define that as steady selling pressure and a change in character in the price action. We have the final failure from $4, and then we have selling pressure in a red candle. And then we break through that 370 and we flush lower. As I start to see that curl, I start aggressively adding to my short position. And now the stop goes from just above the high of this kill candle, 437, to just above $4. The stop is now $4.01. And I know that this was the moment for many traders on my team where we saw an excellent risk reward, because that second leg lower could potentially flush through low of day at 260. We could have a similar measured move that we did from $5 down to the bounce from that kill candle. And there's just an excellent risk reward opportunity in this area. So again, this was the moment where I saw many traders on my team and at the firm really increasing their size with a tight stop just above $4. Following that move, we get a really clean flush, and now we have a lower low. I'm trying to be as patient as I can. After a lower low happens, I would love to see a flush down into 260 and we take out low of day, but price holds and holds and holds 280. I don't want to be stubborn about that, so I am covering a quarter of my position. We get the first pop into that 9 EMA. Let's zoom out a little bit and look at a 2-minute. I find that the 9 and 21 EMA a little bit more reliable on a 2-minute. You see we pop into that 9 EMA on the 2-minute, and you can see how much cleaner it is on the 2-minute on that first bounce. Tags $4 in that 9 EMA and fails. And we're back at 280. After that failure from the 9 EMA on the 2-minute back down to 280, I really want to see that break and momentum continue to the downside. And again, price holds for about 4 or 5 minutes. And it's a good idea to take an additional piece of profits and cover another piece of that short down at 280. Following that move, we get a trend break. So And we could draw a simple line here, or we could quantify that by looking at the 9 EMA for the trend break, and price starts to hold above the 9 EMA on the 1 and the 2 minute, and that trade is over for me. Since we have that kill candle and the close on lows, I now have conviction that open is on its backside, and I'm going to look for a second day continuation to the downside. The stock closed at the bottom 20% of its intraday range, which is confirmation aside from that kill candle. And now, if I truly think the stock is on its backside, I want to short pops into resistance for great risk reward trades rather than chase weakness. The next morning, we have a gap up, which I'm looking at and my team is looking at as a gift. And it aligns with that $4 level that was rejected after the bounce following the kill candle. In the morning, I'm seeing an attempt into $4 and a failure. A failure into $4, but it's holding 380. Off the open, we get a push into $4, a hard rejection, and I notice a large bid at $3.80 that gets taken out. That is the moment I'm going short with a stop just above $4, just like that kill candle trade after the bounce. Rejection from resistance and an opening drive to the downside, and I'm taking this short, and my stop is $4.01. Following that move, price begins to hold below VWAP, and we get some momentum down into the prior day's close. So the stock is attempting to go red, and that is a place for me to take some profits. We're still below the 9 EMA, rejecting the 9 EMA. I'm convinced that this is a strong trend. We trade back into $3.20 in that prior close level. We pop into the 9 EMA again, and then we get this break on high volume. So you can see in the consolidation at lows, volume fizzles out. And then it comes back in on the break, which is an opportunity to add back for a momentum scalp. Following that trade, we get this reversal, and we break trend from the highs, and the trade is over for me. The next opportunity I'm thinking about is a VWAP continuation trade. What's interesting is this move through VWAP that goes limit up and starts to squeeze. I'm sure a lot of traders that were chasing weakness got squeezed out on this move, especially into that limit up, thinking that this was a trap and price is going to go much higher. What was interesting about this is after it opens from that volatility halt, it does not open higher, it opens at the same price, and it gets slammed down through VWAP. Now I'm looking for a VWAP continuation trade, risking just a few cents above that recent high. And I'm adding short on the pops versus that high. I'm adding short on the pop versus that high. And this is the moment. We could draw a simple trend line here, and suddenly VWAP is now acting as resistance, and I'm adding to my short, accepting the risk to that recent high. As price trades back into 320, I'm taking covers, and I'm left with a swing trade that I plan on holding into the end of the day. I have a nice profit locked in from that opening drive and from that momentum scalp through that consolidation. I'm in from great prices on the VWAP continuation, and I just want to let the trade work. In the morning, we get a washout down to $2, and I'm still holding, and at the end of the day, I decide to cover that position. Now that price has gone from $5 back to $2, giving back half of that move on the daily chart. And finally, Bitcoin from July 9th to the 14th. This wasn't just another breakout swing trade. This was Bitcoin breaking through all-time highs, and it came with a perfect storm of context. Strong ETF inflows, a clear risk-on market environment, and a clean consolidation just below the key level. Every trader at the firm was stalking this one, and everyone had a slightly different way of trading it. I'll walk you through exactly how I looked at it and executed. Technically, this was as clean as it gets. A steady buildup, rising volume, and a breakout over a level that everyone was watching. The move wasn't choppy either. It was decisive, and the confirmation was clear. This is the kind of trade you have to be ready for before it happens. And Bitcoin gave you plenty of time to prepare. Let's break it down bar by bar and walk through where the real opportunity showed up, even before the all-time high breakout. Okay, now we're taking a look at Bitcoin on the daily chart. And you can see since it hit its recent all-time high in May, it's just been consolidating and building this wedge pattern, starting to coil, starting to wedge, whatever you would like to call that. What is interesting to me about this is this move here on June 23rd. You can see clear support. We're looking at IBIT, one of the most liquid Bitcoin ETFs. Clear support at $58. It holds, it holds, it holds. And this move likely shakes out a lot of longs and then it reverses back inside the range. That is typically a sign that the breakout is imminent after that shakeout. And what's also interesting about this is you can see that IBIT holds that 50 SMA perfectly. Pulls back into that 50, shakes out weak-handed longs that have their stop just below 58, and it rebids. You can see it's pressing the top of that trend line from the previous all-time high. And then we get a break above that trend line. And I did take an attempt at this long in here, and I did get stopped out below this candle. And this just goes to show that our best ideas, our top ideas, our favorite ideas may take more than one attempt to get right. If the pattern is still intact and you still like the trade and nothing serious has changed, keep up with the idea. I find that too many new traders, they'll give up way too quickly on an excellent idea, or they won't set up their risk in a way that gives them multiple attempts. So just wanted to throw that out there. And now let's just zoom in a little bit and look at a 30-minute chart and an hourly chart. We'll see something pretty clear here. This 62.50 level. We have the previous all-time high and then fails through 62.50 and can't hold above. Cannot hold above 62.50. Cannot hold above. Cannot hold above. Looks like we're going to break out through 62.50 and then we fail. The breakout through all-time highs is clear. Everyone could see that, but is everyone seeing this 62.50 level? Probably not. And that's really the level that I was looking for Bitcoin to hold above to lead into that move through all-time highs. So let's take a look at what happens the next time 62.50 is tested. So now we're looking at July 9th. Each morning, as this is setting up, I'm checking Bitcoin. I'm setting my alerts. And since we're just under 62.50, I'm going to be watching Bitcoin really close. In the morning, we get a little dropout and we reclaim VWAP and 62 holds, and then into the close, into power hour, we have a tight consolidation near high of day. And then volume starts coming in over 62.50. I'm getting long through 62.50, and at the same time, this is A+ higher time frame breakout opportunity. I'm spreading my risk across weekly calls and calls for next week. I'm buying the weekly 63s, I'm buying the weekly 64s, I'm buying next week 64s, and I'm buying next week 65s. I love this idea. I'm even buying call positions in Bitcoin-related stocks like Coin and MSTR to accompany this trade. I want multiple ways to win on this trade, and I want to spread my risk across different Bitcoin-related names. MSTR, MicroStrategy, has ripped in the past on Bitcoin breakouts. So has Coin. What I'm doing is, on the weeklies that expire in about 2 days from the time that I put them on, I'm accepting the risk to zero on those trades. The calls that expire about 8 days from when I put them on, the following week's calls, I'm risking them to below this low of day. This is a breakout attempt through a key level that should lead to all-time highs. If this breakout fails and this low of day is taken out, I will get out of those calls. I'm doing a rough estimate on how much I'm risking on those calls via the delta if this low of day gets taken out. And I know that it's highly unlikely that I will lose all of that premium that I purchased. Before that premium for the following week's calls goes to zero, there will surely be some signs that I'm wrong beforehand. I'll be able to minimize my risk on that trade. So I am buying more premium than I intend to lose. I just want to say this volume is extreme. If we zoom out and we look at a 2-minute chart over the past 5 or 6 days, there is no day where we see volume up at 1.5 million shares on a 2-minute or 2 million shares on a 2-minute. We're getting that volume confirmation over 6250 that I've been looking for. And by the end of the day, we're testing that previous all-time high. Keep in mind, this is a higher time frame breakout. It's a higher time frame swing trade. The next day, for most of the morning, price is consolidating and it is doing absolutely nothing wrong. This is perfect. This is what I want to see. Price is able to hold higher. It's able to consolidate. Rather than over-analyzing every tick for a swing trade, we could zoom out and look at our 15-minute chart, and that will really clean it up. If we look at a 15-minute chart, we could see how well 63 is being supported. It is supported on the pullback in the after hours following the breakout. It is supported all morning. There's big buyers down at 63 supporting price, which ultimately leads to another high volume breakout through the previous day's high and through that previous all-time high, which is an excellent opportunity to add a momentum lot using equity. Now, more traders are buying the all-time high breakout. Not many of them were able to see that 6250 breakout that triggers the trade, but surely everyone who's paying attention to Bitcoin sees this, and it's adding fuel to that fire. Another excellent long through that previous all-time high resistance and prior day's high. At this point, I'm beginning to scale out of the weekly calls in order to make this trade risk-free. And after the close, we get this explosive move higher. I believe that to be due to margin calls, shorts getting squeezed, shorts getting taken out of positions by their broker, and I'm scaling out of my equity portion into this move. The following day, Bitcoin opens up at 67. I am selling the remainder of my weekly calls, and I'm starting to sell my swing positions for the following week. And we're left with another consolidation. Nothing wrong. Price is holding these levels. We're having a consolidation. Price is being accepted at these new prices. And then over the weekend, we get our final gap up. This is where many traders on the desk sold out of their swing positions as we traded into the $70 level and price got short-term overextended to the upside. Thank you for tuning in to another Bar by Bar, and we'll see you next time.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.